It has been an absolutely terrible year for crypto. Investors have been startled by the heart-wrenching collapse of the stablecoin platform known as Terra Classic, the halted withdrawals from the Celsius Network crypto-based savings service, and other concerns peculiar to the crypto market alone. Each of these concerns tend to drag Bitcoin down, as it is tagged as the leading cryptocurrency. If these worries continue to plague the crypto market, Bitcoin will be like a captain going down with his ship. Then another cryptocurrency could rise and claim the spotlight. The world of cryptocurrencies is like a race, where volatility is the main language, and with this, currencies strive to outrun one another. Bitcoin is the first cryptocurrency and remains the major name in the business, while Cardano is just a young smart contract platform with an ambitious long-term roadmap. Both of these digital coins rose in 2021 and crashed in the first half of 2022, and in both coins there have been stalled growth trajectories. Bitcoin's price has plunged way below its November 2021 all-time high, but generally over the last 2 years, it has generated upbeat returns in the market. So the question is, what went wrong? Generally, Bitcoin's price drop has been tied to the same investor fears that weighed on the Wall Street's growth stocks. Now, inflation is skyrocketing in America and all around the world. The government is also lifting interest rates to combat inflation, which implies bad news for growth stocks and cryptocurrencies. These developments have prompted so many people to step back from volatile investments. There are better days ahead, and the crypto sector will make a comeback. Certainly not right away, but in the long run. And while waiting, so many things could happen. Cardano's future may be even more interesting than Bitcoin's. Over time, Cardano has continued to gain new features while staying at the forefront of blockchain innovation. If Bitcoin provides the capital of the future, Cardano is positioned to deliver a lot of the functionality of decentralized banking and transactional services. Cardano ADA appeals to a different type of investor than Bitcoin, presenting larger potential returns in a more competitive subsector, but there are no losers in this race. Yes, Bitcoin is the closest thing to a guaranteed winner in this explosive market, thus encouraging long-term investors to build their crypto-focused corner of their portfolios around the coin. This fact alone makes the thrilling yet unpredictable Cardano ADA quite irrelevant. However, Bitcoin has been plagued with various limitations. Cryptocurrencies have had a rough week following the financial crisis of one of the world's most popular crypto trading exchanges, FTX, resulting in a Chapter 11 filing for bankruptcy protection. The first waves of trouble were seen when the news site reviewed a leaked balance sheet for the crypto billionaire Sam Bankman-Fried's investment firm, Alameda Research. The document revealed a much slower connection than expected between Alameda and the FTX exchange, both under Bankman-Fried's control. As investors and press outlets dug deeper into the leaked document, it turned out that more than $6.2 billion of FTX's $14.6 billion in financial assets is consisted of the FTX token, which is used to distribute incentives and foster leveraged trading on the FTX platform. This situation worsened when Binance said it would liquidate its investment in FTX, and the FTX token fell more than 12%. The complicated turn of events led to a massive price decline across the entire cryptocurrency sector, as investors saw one of the most trusted platforms in the business tilting back and forth on the edge of bankruptcy. The FTX document did not include any holdings of leading crypto names like Bitcoin, but normally the collapse of a leading crypto exchange affects every corner of the market. The crypto market was fundamentally shaken by the collapse as well. Some headlines had even compared the breakdown to Lehman Brothers' implosion in 2008, which ushered fundamental changes to banking regulations and launched several economic stimulus acts. Simply put, Bitcoin is not always spared from these kinds of attacks. The collapse might end up being a positive development in the long run, but the negative effects of the crisis will badly influence the price of the coin. The Cardano creator Charles Hoskinson revealed his stance on Bitcoin's value proposition as it has increasingly become used in the realm of decentralized finance. He believed that wrapped coins pegged to the price of Bitcoin will spread like wildfire across a wide slew of smart contract-enabled blockchains. Quote, "My prediction is that in 5 years, the majority of Bitcoin will not be on the Bitcoin network, but rather actually wrapped floating in other networks. And that wrapped Bitcoin will be used in all kinds of dApps and smart contracts," end quote. In his words, the wrapped token could even be used by nation states to create a means of exchange in a unit of account to have a stable currency that they can use for daily transactions inside their ecosystem with a sound monetary policy. Charles Hoskinson attested that wrapped Bitcoin is vastly superior to regular Bitcoin, as wrapping the flagship crypto asset enhances its utility value. In practice, the users of the system are already putting it into legacy financial systems. At least by wrapping them in cryptocurrencies, you have a self-custody and all these other things. It is vastly superior to the way it is currently being used with the infrastructure there, he added. Also, Bitcoin has continued to be a roller coaster ride characterized by high peaks and drastic falls. Well, it is easy to say that massive retracements are always threatening, but seasoned investors tend to see them as buying opportunities. According to Nathan Reef, Bitcoin is volatile because it depends on feelings and projections. Bitcoin's price fluctuates because it's influenced by supply and demand, investor and user sentiments, government regulations, and media hype, he published. So many factors have affected Bitcoin, and they work together to enhance its price volatility. Instances like China cracking down on banks to complete crypto transactions, Tesla's refusal to accept more crypto transactions as a form of payment, and Elon Musk's alteration of the crypto market through his tweets work together to alter the value of cryptocurrencies, more specifically Bitcoin. The seeming weakness of Bitcoin are not enough leverage for Cardano to claim superiority. The same factors that are responsible for Bitcoin's flaws are also going to affect Cardano to a significant level. At one point last year, Cardano was the third largest crypto asset in the market and was positioned below Bitcoin and Ethereum, and before the Alonzo hard fork, it rallied and climbed to an all-time high of $3.10. But if you fast forward to the present moment, the ADA coin price has been slashed by more than 10 times and is currently the 9th cryptocurrency by market capitalization. Cardano's volatility is at an all-time low of 43 cents to 44 cents, and whenever this metric has hovered around similar levels in the past, the ADA price remains stagnant. There is hardly any support on the on-chain front to change the narrative for Cardano. The active addresses have refused to climb back up. Bitcoin is hot, and Cardano is not. However, Charles Hoskinson is currently shooting its shots about forming a Dogecoin Cardano alliance with Twitter. Since Elon Musk's disapproval of Bitcoin, Cardano might get a chance this time. Thanks to Musk's Twitter takeover, Dogecoin is the hottest crypto around. Given all the buzz revolving around Twitter and Dogecoin, it is not surprising that some cryptos will try to partner with Musk's favorite, and that includes Cardano ADA. The Cardano founder has tweeted a poll about this alliance, and if the response turns out to be overwhelmingly positive, Hoskinson said he'll put together a proposal for a post-quantum, ultra-fast, and identity-enabled Doge sidecoin of Cardano custom-built for social networks. I mean, it's an incredible idea. Interpreting this proposal, it is easy to conclude that Cardano is making a last-ditch attempt to stay relevant. The situation is like if the ADA coin price won't spike and comply with the overflowing hype, something else had to. The price of the crypto is nearly down 80% for the past 12 months. And there is an impending fear that it might fall below 30 cents. Dogecoin's recent surge has vaulted it ahead of Cardano in terms of market capitalization, and clearly, the market response to Cardano's big tech upgrade in September has been a complete washout. A Dogecoin Cardano alliance will definitely help Cardano, but what benefit will Dogecoin get from it? It seems strange that Cardano, a currency known for salient and cautious academic approach, is suddenly interested in a silly meme coin. Let's think about it this way. What if Cardano is trying to play its balls well by helping out Dogecoin? Of course, Cardano has the upper hand given its more robust proof-of-stake blockchain is capable of handling smart contracts, NFTs, decentralized applications, and decentralized finance protocols. On the other hand, Dogecoin still operates a relatively slow blockchain that badly needs to be upgraded to a proof-of-stake. So, from this perspective, Cardano is doing Twitter a favor by keeping Dogecoin afloat and might end up being the unprofitable helper, which is not what it wants to do right now. Cardano needs leverage, a sustainable one, and it's only when this happens that we can now consider whether it is superior to Bitcoin or not. Till then, its efforts will not go unnoticed. But of course, what are your thoughts on this? Let us have them in the comment section below. We'll see you in the next video, but before then, check out other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.